What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol PED for Pedevco Corp. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. This, of course, will be the first time we've covered this together on the channel, so let's start by giving ourselves that infamous daily roadmap, just pointing out obvious areas of support and resistance. Then we'll talk more nuance as we drill down to the 30-minute intraday session. So that's going to do it, kind of from the daily perspective at least. Let's zoom in a bit here, and I actually like this as a breakout point, and I'm also noticing with this slight zoom in we get something like this off the lows. Let's see if it works. So dragging out, and yeah, pretty darn good, right? Noting that we get touch 1 and 2 here for some sort of support trend line. Note that we've made a higher high, significant higher high. If we pull back into it, again, I'm not saying that this is a buy, but we would expect a little bit of a dead cat bounce at least, again noting that we have made a higher high from in here. Before we drill down to talk nuance, let me zoom this out and sort of give you my perspective on what's going on here. If you look at what's happened in the past, right? Big pump, big dump, big pump, big dump, so on and so forth here. This was kind of a respectable rally in terms of what was going on with structure. But recently, right, the last 2 days, big pump, what would you expect is the next sort of logical thing to happen here? It's, I guess what I'm getting at is that it's a supply and demand issue, right? It's not really a fundamental shift in the company. If you look at every single time that it's pumped in the past, obviously happening on really solid volume down below. And once again, we have a bit of a pump with solid volume. So again, it's not to say it can't go higher, but if volume does dry up and get back down to non-existent, basically, like in this section, I would expect the chart to sort of roll over and go sideways back inside of this overall range from in here. Let's talk a little more nuance from the 30-minute, then wrap this video up. If we take a look through the lens of Fibonacci from the low all the way on up to the high of the move, what you can clearly see here is the fact that we did, retrace essentially under the 38.2, but more importantly, we're now using it as resistance. Notice how no candle has closed above here, and into the end of today's session, we could barely even get into it with those upper wicks. So I would treat this as a general zone of resistance, noting that 201 was this prior structural breakout point from in here. So I like that as a resistance zone. The line in the sand on this one is, of course, going to be the 61.8. If we start closing candles underneath this level here at the 183, it very much so increases the odds that you see a 100% retracement, which would be back down towards 150. So please be careful if that 183 is breached. That would be a breakdown of the 61.8, and you can see it has acted structurally as well. So those are the levels I'll be watching on a breakout back above this sort of 2, if you will, right? So healthy consolidation here, break like that, just target this high from in here. So that's at 242. After that, you're looking at probably 5, 10, and 20 cent marks here, or excuse me, 25 cent marks here inside of something that is trading underneath $5 at this point in time. So those are my thoughts. Again, be careful if volume does start to dry up, and especially if it dries up and we take out 183. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.